The topics of discussion for today. The first one will be, regulations, private sector participation, and economic impact. Transforming AML in MENA, navigating the challenges of digital age. Conduct all OSINT investigations within minutes into the first interface. Breaking barriers, building trust, innovations in data and technology for MENA's financial crime compliance. Sanctions compliance challenges in MENA. Adoption and increased use of blockchain and assets with the involvement of automation, KYC innovation, digital onboarding and developments, nurturing a resilient fintech ecosystem and digital payments in the Middle East, maintaining operational resilience in an environment of increasing dependence on cloud, AI, and third-party providers. All right, coming to the first session for the day, it will be the panel discussion on the topic regulations, private sector participation, and economic impact. And we have four distinguished gentlemen who will be sharing their views on the same. The first one would be Mr. Oways Mustafa Yousef Muti, the Compliance and Risk Senior Manager for Abusheikha for Exchange Jordan. Mr. Benjamin Anafi, the Head of Governance, Risk and Compliance for Ali bin Ali. Mr. Abbas Ali Muhammad Hussain, the Acting Chief Internal Auditor for Bank Dhofar. Mr. SalaheddineElGbouri, the Group Leader for AML Compliance for Western Union. A very warm welcome to all four of you for taking some time off your busy schedule to be a part of this particular initiative. Right. So, to quickly introduce our panelists, to start with Mr. Oways Muti, he's a seasoned professional with over 10 years of experience in the financial sector, specializing in compliance and risk management. Currently serving as a compliance and risk senior manager and MLRO at Abusheikha Exchange, Jordan. Mr. Oways is recognized as an expert in combating financial crimes, including anti-money laundering, counter-terrorist financing, fraud, and corruption. Oways holds two prominent certifications, including the Certified Anti-Money Laundering Specialist and the Certified Compliance Manager, which attest to their expertise in their field. Oways has also provided consultation services to numerous exchanges houses in Jordan, leveraging his deep understanding of compliance regulations to establish robust compliance monitoring programs, practices that minimize risks while ensuring compliance with all relevant laws and regulations set by the central bank and other competent authorities. As a trailblazer in AML field, Oways has played a pivotal role in establishing one of the most significant AML solutions in Jordan. He has also evaluated various programs to ensure their effectiveness and compliance with regulatory requirements. And coming to the next panelist for the day, Mr. Abbas Ali. He's an internal audit professional with a serious success story of more than 20 years, having led operational, financial, business internal audits, conducted numerous high-value fraud investigations, and carried out various bank examinations under central bank regulations. He has also worked with credit rating agency, banking institution, and leasing company. He's won multiple organizational excellence and performance awards for the team, great passion for internal audit transformation, and the ability to build relations and partnerships that help positive contributions by internal audit in improving organizational processes. And the third panelist for the day is Mr. SalaheddineElGbouri. He's an experienced director of compliance with a demonstrated history of working in financial services industry. He's skilled in enterprise risk management, internal audit, banking, and AML compliance. With a strong financial professional with an executive MBA focused in management from Group A ISCA. And last but not the least, Mr. Benjamin Anafi, with over 15 years of experience in governance, risk, and compliance. Ben has worked with some of the world's largest banks and international organizations, including HSBC, Barclays, Bank of China, and Deloitte. In a variety of senior roles, Ben has led and managed teams implementing change programs in risk management, regulatory framework, and control mapping, and end-to-end builder of compliance and AML control frameworks. In his capacity as an MLRO, Ben has expertise in all areas of financial crime, including risk assessment, system implementation, reporting, and strategy development at the senior management level. A very warm welcome to the four of you, and we would definitely like to kickstart this conversation. And firstly, I would like you to introduce yourself, based on the expertise that you have with respect to AML, CFT, and other financial frauds. Mr. Oways, would you like to go first? Mr. Oways, your audio is not. Uh, can anybody confirm if somebody can hear you?
No.
So Oways, we still can't hear you. I think there's some issue with the headset, I guess. Or you can set the audio to defaults. Once you go to settings at the bottom of the screen, do you see settings? You can set it to defaults. And in the meantime, Mr. Benjamin, would you like to introduce yourself by the time we get the audio issue sorted with the Oways?
Sure. I'm hoping you can hear me fine.
Yes, I can.
Okay, good. Thank you very much. Hi, everyone. My name is Benjamin Anafi, and thank you, Anil, for the introductions. As mentioned, I've worked for a number of large banks and financial services organizations, also as a consultant, which was interesting because it allowed me to see firms at different stages of their compliance, financial crime, and risk journey. And I think probably what I've found the most from that is that there's not a one-size-fits-all approach for compliance, but the trends and the requirements are the same. So it's really about how you can try to find a proportionate approach for your firms. And that's probably the interesting work of a compliance officer, which I've seen over the years. So thank you. I hope to enjoy this discussion. Thank you.
Mr. Abbas, would you like to go forward next?
Yeah, please. Thank you, Anil, for the invitation and getting us here together. My voice is clear. It's audible.
Yes, it is clear.
Great. Basically, in relation to today's discussion topic, I've got the experience with regulatory frameworks from multiple countries. I've been working with the central bank for like 7-8 years in examination primarily, where I contributed to the building of regulations in the country also. Carried out some assignments during that time in Qatar as well as in Bahrain, and have been in Oman for like more than 12 years now. Had the chance to work with the compliance department, and then I'm currently leading internal audit for many years now, actually. Basically, in overall experience has been in the financial sector, and we have been interacting now increasingly with various other organizations, who want to penetrate the market with innovative ideas, especially for their payment systems, fintech initiatives. So it's very interesting topic to talk on this, and I'm glad to meet the other panelists, and thank you very much for the opportunity to speak to the larger audience.
Great to have you on board, Mr. Abbas. Mr. Salaheddine?
Good morning, and thank you, Mr. Ali. Do you hear me well?
Yes, we can.
Yeah.
Excellent. So thank you for the invitation. I'm really glad to be part of this great conference and to be part of this panel discussion as well. So I attended yesterday the whole sessions, and I found it very interesting, and I'm learning as well with you. I would like to have a good discussion and to learn from my counterpart and for folks. Also share my experience and give some best practice as well from my side. So happy to be here. Anil, you are on mute.
Mr. Oways, if you could kindly remove the audio and set it to default. If you okay, you're on mute, Mr. Oways. Apologies for the delay, gentlemen. Okay, we'll quickly have Mr. Oways on board so that we can initiate the discussion first. All right. So addressing the elephant in the room: regulation, private sector participation, and economic impact. So if you could kindly share your thoughts based on in your line of work, or maybe the geographies that you have worked on. If you could kindly share some thoughts on it, we can initiate the discussion. Mr. Salahuddin, would you like to go first?
Yeah, of course. Thank you, Anil. Thank you. And this is, by the way, a subject that is close to my heart because it's part of our day-to-day job. So I think it's very important to highlight the new collaborative approach from regulators. I think there is a shift from the old and classical mindset of having one side and issuing, enacting regulations with immediate effect is over. So since a few years ago, we are meeting with the regulators, and almost all of them, they are adopting this collaborative approach and positioning the private sector as key actor in any new regulation that is drafted or need to be issued. So they are hearing from the private sector, and we were happy to participate in many discussions where different players from the financial sector are participating and discussing with the regulator like we are discussing here. So there is no, we feel comfortable to share idea, to share suggestion, recommendation, and to discuss any particular topic. Even the requirements and the restrictions currently they are subject of discussions. Sometimes they are, in the perspective of the regulator, they are mitigating risks or they are putting additional control. But from the private sector as well, the threshold or the different restrictions can be subject to, let's say, negotiation or to discussion, or even the time frame of implementation, knowing that the immediate effect of requirements sometimes is just impossible because of the setup of the system, the development needed from IT side. So some of the projects may take some time. So those are the part of the discussions about the requirements, and the collaborative approach is helping both sides to have successful controls in place, to have a good setup with efficient and effective effects.
Fantastic. Mr. Abbas?
Yeah, thank you, Anil. Actually, I'll take forward the points raised by Salahuddin. Actually, if we look at the regulations and the approaches being followed by the central banks, we see very good signs lately where they are very open for, for discussion, for involving the private sector, and also even entertaining the request from across the borders Although these changes we see, but if we see in the end, we still don't have like borderless banking. Still the licensing requirements are in place, and whenever we try to board the customers from across the border, there are regulations which require a certain set of additional due diligence requirements. This is rightly so because we have differences in different jurisdictions in regulating the corporate sector as well as the banking sector. If we see the past, as I see the progress in my bank and from the industry in Oman also, if we see the ratio of accounts being opened from other countries, if we look at the purpose of such accounts being opened, whether it's just the routing of the transaction, like money laundering, or it is a genuine need of the customer to facilitate their transactions or their business in that country, or it is the attraction of another financial sector across the border, another experience, or a better regulatory and banking environment for them. We see that now the customers are more open to come across the border and avail the banking facilities from other countries. Similarly, the fintech funds, they are being facilitated to have their operations across the border, but still the borders are not softened the extent they should go to make it look like a single financial sector within GCC, for example, or within MENA, for example. But there are different projects which are heading towards bringing all the players together and closer to each other. Like we have Buna now, that is a payment system where many countries are opting to join. And also there is another project which is going on, which is AFAC, or sometimes it's called GCC RTGS, which will bring all the players more closer to each other and will facilitate the innovative ways of transactions, especially the cross-border transactions and the payments.
Fantastic. Mr. Benjamin?
Yes, thank you. I think there's some fantastic points that have been made by the panelists so far. And just to add, I think looking back at my time working for some of the bigger banks, when I worked for the likes of Barclays and HSBC, there was quite a heavy reliance on regulators to invite responses from consultation papers when new regulations were coming in. And I think it's an understanding that they would need that private sector participation to give that real expertise of how things can work when they are properly implemented. That's something that only the actual participants can really know in real effect. And I think it's intriguing to see how this has developed over time. There's a lot of talk in the last day about fintech and regtech firms and where we are and where the landscape is moving. And I think from a regulatory perspective, there's been clear sandboxes where they're really inviting firms to try things and see how they can work. In the UK, they have tech sprints as well, where you'll have it's almost like a hackathon where you'll be given a task and a number of different participants will be able to really try to figure out how things can work in the right way. And intriguingly on that note, we obviously moved from fintech, regtech to subtech as well, supervision technology, whereby the regulators are now trying to find ways that they can utilize these tech platforms and tools to enable their offerings better. And that's quite interesting. I think in Amsterdam, in Holland, for instance, actually, they've gone to some real lengths to be able to understand all of the financial crime data of each firm, and they can almost understand what's happening in real time when something's going wrong within a firm from a regulatory standpoint. So that's really bringing everything full circle in terms of how we're managing things, how we're consulting with regulators, and then how we're supervising. So there's a lot of interesting changes in that respect. And I think that's probably some of the key things. I think some other points were made about central banks speaking to each other a lot more to really understand how they can collaborate in that way as well. And I think all of these things are positive in terms of achieving good customer outcomes in the long term.
Fantastic. In fact, one of the key points that all three of you mentioned was a collaborative regulatory approach, right? So, what would be the best practices in establishing a collaborative regulatory environment for expansion? Mr. Salahuddin, would you like to take it forward?
Yes, of course, Mr. Ali. So I think the first thing is to build the bridge or to create the channel of communication. I think initiating the contact, getting in touch with the regulator, having direct contact, and show up, even setting up regular interactions and meetings. It can be face-to-face or virtual, but this bridge or channel of communication is very important, mainly to stay tuned to any new regulation coming, or if there is ongoing discussion on the particular projects. So with the bridge and create the channel of communication, for me, is the first step before going beyond and establishing a good collaboration.
Fantastic. So, Mr. Abbas, would you like to share your thoughts as well, please?
See, I actually talk a lot about the central bank's, thought processes because I have been there in those seats and talking about these things. Basically, if we at least talk about the regions and the blocks, we should aspire for these central banks should, put in place regulations which could be standardized across the jurisdictions. Let's say fraud deterrence guidelines. Why can't those be the same across multiple countries? Let's say GCC. Okay, for example, the compliance due diligence requirements, they can be the same, and also when there will be set of different regulations which are probably close to each other within different countries, what will happen is that the central bank will be much more open to invite the other banks, other countries' banks to operate in their jurisdiction with minimal additional licensing requirements. This way, the markets can be opened up for better efficiency by the multiple players. At the same time, once that mindset will be there, there will be less restrictions in onboarding and accepting the customers from across the border, because the host country and the home country, they will know that it's the same kind of jurisdiction and same kind of regulations, and the regulatory environment exists in each country, and that is a matter of confidence among the central banks in the entities being regulated by their other counterpart in the other countries. So if that collaboration increases and the set of regulations are standardized to some extent, and the confidence of the central banks to host or to invite the entities from other jurisdictions, and also rely on the customers and the other private players, that they will be at the same standard like their own. If that confidence is there, that mindset is there, I think the speed and the efficiency that can be achieved for inclusion of different players, that can be much faster.
Fantastic. Thank you so much, Mr. Abbas. Mr. Oways, I hope the audio issue is sorted at your end.
Yes, Samil. Sorry,
Fantastic.
Sorry for the technical issue.
No, I understand.
Suddenly, there's something.
I understand. So, in fact, I would like to start all over again with you with respect to the first pointer that the rest of them were discussing on the point of regulation, private sector participation, and how does it impact economically. I would like to hear your opinions as well on the same.
me, right?
Yes.
Yes,
Yes,
sure.
it would be for you.
Thank you very much. Thank you. First of all, like the regulation usually, it's uh, uh, it's put in place to prevent illegal flows for the money through the financial system, combating terrorism financing and money laundering, fraud issues, many issues that usually we just aim on it. To ensure the integrity of financial institution and protect the global finance from abuse, especially in the Middle East countries, we are using a good regulation. We have a good following up with the government, and the private sector is trying to be aware and compliance with that. AML regulation vary across jurisdiction, but they generally require financial institutions, including banks, exchange houses, payment companies, and other entities involving in financial transactions to establish robust internal controls, public policies and procedure, to prevent money laundering transactions. Uh, when we're talking about customer due diligence, we are talking about record keeping. We are talking about how you can reporting suspicious activities and transactions. So when you're just following up with that, you know that there is a compliance needed to be done.
Great. And we initiated the second point of discussion. So, Oways, you there?
Right?
Okay, great.
Hello?
So we try to stress upon the second point, which is on a collaborative regulatory environment, which can support the expansion. Your thoughts on
Private
this,
sector.
please?
Yes, private sector participation is very important because the private sector is the leading sector right now in the countries. For sure, the government, they're always trying to be committed to the private sector, and they are trying to help them to be always on the track. But the private sector, they have their load enough because they need to commit with the regulations and the laws and the government instruction, but usually also they have to balance between the business and the compliance and the business and the risk, let's say. So when there's enough risk, they need to take it. They need also to be complied with the regulations and all the applicable laws. So when we are talking at that side, when the companies, they need to decide what is the risk appetite that they are working on it, what is the risk capacity that they are working on it. So when they are understand very well that they have that space from risk capacity, they are working on it. So they need to sometimes to let away some types of business or models, or sometimes they need to don't go forward for a type of businesses. So that keep the private sector, sometimes they cannot achieve the main goal to expand in the market. So this is one of the hardest issues that they first. All right. And for sure, we need to mention that the private sector participation involves establishment internal controls, conducting due diligence, customer transactions, training employees, reporting suspicious activity to the competent authority. That type of workflow they are trying to commit to do with the regulatory authority. Financial institutions should cooperate with the regulators and the law enforcement agencies to share information and combating money laundering effectively. Because the effectiveness right now, it's the most important issue in the compliance, especially because when you are working without a good, effective ratio. Like when you are just working in a compliance department, you have more than 200 red flag, or you have more than 200 hit per day. So they have a lot of work to do. If they are not working on a risk-based approach and if they're not working effectively, they will lose their time. They are work like messy. They will not achieve the targets also. So the
Great, great.
participating together will get the good achievement on that. Thank you.
Great. In fact, unanimously, all four of you agreed on the point that it has to be a cross-border collaboration with various central banks and private entities as well. But our question is, how do you scale it up? Right. So we have certain framework in mind, which will be dynamic, of course, depending on the kind of the latest frauds that are happening and all that. But how do you scale it up, and at the same time having a cross-border collaboration with other entities?
Good. We need to tell the scale. It's good right now because the private sector is right now enforced to be committed, because the international laws, FATF recommendations, everyone he need to be committed. Like you see that the last 2 years we see the Jordan, UAE, Turkey, and the grey list. So the government, they should to push the private sector and all the sectors, not only the financial sector. Right now, they are pushing on the financial sector and a non-financial sector. As we know, the lawyers, the other sector, other department. So when we are, and right now the commitment scale, it's good. Let's say there's a good cooperative between us. And when we're just talking about the international cooperative with the other companies, usually that's cooperative also. We just working for it to be committed very well. The standard right now, the international standard, is very high. The companies that you work with, and when you just have to open a new line, a new business model, or a new dealing with an international company like many international companies that we work with, you have a long process. It's already a long process. You need they need to verify you. They need to read your profile. They need to take your paperwork, and then they need to decide if you are committed or not. And they have to review the compliance department workflow. So it's not easy, especially when you are talking like with huge institutions like Western Union, Mr. Salah, for sure. That's a very huge institution. We work with it, so they have a strict policy and procedure and workflow. And for sure, when you're just dealing with correspondent bank, like a small bad news about any reputation of any company, that's go with the company very, very down. You cannot correct it. They just take measures. Maybe they give you a fine. They block your accounts, so you don't have. It's not easy to correct that type of issues. Anil is okay.
True. Thank you. Thank you so much for your views on
Thank you.
service, Mr. Salahdin.
Yes, I have some thoughts.
Because
Yeah.
I know for a fact that you've been working on active projects on this particular topic for quite some time. So if you could kindly share some of the real world examples that you've worked on, it would be really helpful for the delegates to learn on that.
Yeah, of course, of course. I was thinking about some cases, situations where we achieved subscale via cross-border, because as Oways said, we are present in different countries. So, and I come back to Mr. Abbas' comments about the regional regulation, or the regulations that are not limited to specific country, but that are covering many countries at the same time. So, for instance, if you take the example of West African Monetary Union or the Economic Community of Central Africa, so those are covering 8 countries, 6 countries under the same regulation with the same requirements. And when interacting with other regulators from other regions, they are also interested to this kind of benchmarking to get information on some best practices from other regions. So the private sector, because of the scope, because of the the knowledge of the regulation in other regions, they may share those, let's say, best practices from other regions with those countries who are looking to maybe set in place new regulation on a product that exists somewhere. Or for this company or this private company, they have already seen previous regulations similar to what the regulator would like to set in place. So this is what the kind of information sharing in order to have unique or the framework is aligned through different countries, not only specific to one country. So I will just consider the KYC, for instance. The example, very simple. The eKYC is becoming a trend. And I know by fact that in some regions like Middle East, the eKYC regulatory framework is advanced compared to other countries. So I may relate to my colleagues in the UAE or in the Middle East to share with me best practices on the eKYC, what could be the best controls, the best, let's say, users to implement the same in other regions where the eKYC is still a baby, still a baby. So this is the kind of taking knowledge from a region to another region, or to share with the regulator the best practice done somewhere.
Fantastic. Mr. Benjamin or Abbas, would you like to share your thoughts on this as well?
Regarding the scaling, see, if any player in any market, he remains restricted to its borders, only that their population and those businesses in one country are at his disposal. If there is a collaborative approach among the central banks and other players, and increasingly the payments become frictionless, and when the regulatory collaboration is there and the payment systems are in place, if the payments are frictionless and those are efficient, definitely the businesses will be able to move at a much faster speed. If, for example, whatever we can do internally within one country, from account to account transfers, or creating standing instructions from one account to another account, or let's say pulling the balance or pushing the balance for different purposes, or maintaining a lien on one account to another account, if the blockchain and other technology, the RTGS and this kind of systems, regional systems, if they can enable all those services regionally or globally, for example, this can enhance the collaboration between the businesses in a much faster manner. At the individual level, if we can see Visa and MasterCard, these are the two biggest players in retail payments, uh, but their usage is limited for the businesses purposes for large scale trade, because there is a friction. They are meant for retail businesses and the customers, and in that niche and that category they have been the best actually, and it's the survival of the fittest. They survive through, and they are doing very well. Now, for what about business to business payments? Any systems, any the collaborative regulatory frameworks which can make the transactions more frictionless, and more and more services can be added to such collaborative approach where there are, this reflects on the systems also, like the systems being put in place, and the communication at the system level and at regulatory level is definitely there, but the technology, enabling technology, that is one critical element there, which with this collaboration, that will also help to make the transaction faster and achieve higher scale and make more efficient, usage of all these resources in making the transactions especially frictionless and speedy. That will all together help to achieve higher volumes of business and to facilitate large scale trades and also efficient business transactions.
Fantastic. Thank you so much, Mr. Abbas. So, Mr. Benjamin, quickly your thoughts on this before we move forward to the next segment of the discussion.
Sure, thank you. And apologies for disappearing whilst talking about tech, which is quite ironic, of course. Okay, so just to add, that's okay. So, of course, international expansions and the benefits that come with it, with cross-border activities, is of course very, how can I say it, advantageous for a firm, and it's the natural progression depending on your firm's journey, effectively. But I think the panelists have definitely called out some really important cautionary tales to be aware of whilst doing that. And I think it's in yesterday's panel they were talking about the concept of convergence, really having a cohesive background where all different areas of the firm are involved in this. So I think that there's key things that could come with that. You have to have a strong overall product governance approach to say, okay, we're going into this region, let's really assess it from all angles, that where the risks lie. Of course, financial crime risk being top of the tree. But that's, of course, you've got to think about tax, HR, payroll, legal requirements. It's endless. I think from a tax point of view, we've got the OECD, G20 looking at the global corporate income tax of 15%. That's something that could cause a lot of issues for firms in terms of understanding what that can look like and making sure that you do things the right way. Looking at some case studies such as Revolut, I think is quite an interesting one, where they've tried to grow very fast, very quickly. And in the UK, they're not getting their banking license because of some of their systems of controls, especially around the financial crimes, not having the right level of staffing, not having the right level of infrastructure. It can really cause things in that respect. So I think there's a lot to think about to really ensure that you can move forward, expand, and scale in the right way.
Fantastic, Mr. Benjamin. You summed it up really well. So moving to the last segment of this particular discussion, I'd like to hear from you all in a real quick succession. How does open banking invite participation? I mean, I would leave anybody can take it. Mr. Salahuddin or Abbas, would you like to take it? Yes.
Yeah. See, currently, what is the situation? Banks in each country are being protected by the borders, basically. If we take an example of a virtual bank opening up in any country, a digital bank, completely digital bank without branches and any local presence, that bank, who can stop that bank from soliciting business and onboarding customers from anywhere from the world, from the globe. Currently, although that we all believe in banking sector, and also the central banks putting the regulations in place where nobody can use the word bank in the country except the licensed banks. Licensed banks are under the protection of that regulation and being supported by the central bank. Any other person who is not licensed to do banking in the country, he cannot, he cannot solicit the deposits from anybody. But if we have the existence of such, institutions which can go any corner of the globe and can onboard the customers, so this these borders are likely to be weak over the years, and the banking needs will be fulfilled by any player from across the globe in any country. So the central banks and the banks and all together have to look at this and have to be open and actually to support this kind of environment where banks can operate borderlessly, and that should come through the confidence in different jurisdictions. If an institution is being licensed in one country, he should have the same stature if it is present in the other country. So again, this if that kind of mindset is there, and banks are allowed to operate globally, or in neighboring countries, in the regions, more openly, that will definitely the support inclusion in the financial system by different players, and making it the overall situation more supportive and conducive for the businesses and all human being altogether.
Fantastic. You, in fact, summed the entire ecosystem into into your pointers in 2 minutes. Really, thank you so much, Mr. Abbas. Mr. Salahuddin, if you would like to add anything to this?
Yes. I think it will be the future. We all agree that during the pandemic and the COVID period, so digital took over more and more on the physical and face-to-face transactions. So this new, let's say, way to look at things or the digitalization is the future, I think, and we start seeing more and more products and application on our smartphones that allow you to perform financial transactions. So if I ask anyone how many times you are going to your physical location or the bank location, so last time you visited the location maybe it's months ago, because everything is on the smartphone. You can play in the application, do your transactions, consult your accounts, and this will be let's say a market of competition as well. The competition is very high in this area. All the banks are creating applications, but not going without challenges, without risks. So the risks are there, and since we are talking about the fraud, AML, and the controls that need to be in place, it should be controlled. The control should be adapted to this new product and new applications. It's very important to think about the evolution from the compliance standpoint, from the risk mitigation standpoint, is also a must, because we can't have application and not have a secure application, or to avoid data privacy breach from banks. Or so data privacy is a challenge. The competition is very hard, and the controls are a must. Controls are part of this assessment of the new applications. So we should always put in place the right measures to mitigate the eventual risks.
Great, thank you so much, Mr. Salahuddin. Mr. Benjamin, would you like to go next?
Yes, thank you. So I think from my perspective, open banking has been a slightly different journey for me, because during that period of time when there was a period of time in the UK where it really kicked off, and it was backed by regulation at the time, which was PSD2, the Payment Services Directive. So that put the onus on banks to open up their payment accounts and allow third-party payment providers to access these accounts and become a PISP, a Payment Information Service Provider, to allow transactions for these fintechs, these third-party payment providers, or an AISP, which is an Account Information Service Provider, to allow you to use your one banking app to access and understand all of your accounts in different areas. So that, alongside that, there was other requirements for strong customer automation, authentication, and complaints management. So that was what banks were told to do. However, on top of that, it was a question of what is the opportunity for open banking? How can we leverage this? How can we see data and all of the information that we have in a different way? Because I think traditionally, when banks have looked at data, and Mr. Salaheddine mentioned that, there's a lot of risk and controls around data breaches and big fines if you get these things wrong. So I think the mindset of open banking is to invite collaboration more, to allow different firms to see and access this data, as well as how you can really push things forward. So I think within the MENA region, it is the question around, okay, how can we really utilize this? How can we invite these new players to the party? And I think there's been a lot of discussion over the last couple of days around AI and fintech and how we can do that anyway. So it's going in the right direction, and I think it can, of course, increase in expansion as we've been discussing today.
Fantastic, Mr. Benjamin. Mr. Oways, would you like to wrap up this discussion? Your final thoughts on this, please.
Yes, sure. Thank you very much. My colleagues here, they just made the point for sure. But we need to focus on the open banking issue. When we're just talking about open banking, every time we focused about the customers and how the life will be easier for them. But on the backstage, as a compliance and the back office people, we will have an issues definitely, because the automated system, it's the right solution, but the cost of the system, it's not easy. It's not easy to afford, especially to non-banks institution when we're talking about private sector companies. So when we are talking about artificial intelligence and reporting process, it's amazing, it's beautiful. Everyone wants to have it. But when we are talking about the cost of doing that, it's very high. So it's good for the clients. We work forward to have technologies that make the cash less. This is better for the compliance, but we have the issues that we're gonna face on the back end. We are just working in everything digitalized, like when the open bank, it's easy. As an example, one of the main things that I didn't mention here, Abusheikha Exchange Jordan, one of the leading exchange houses in Jordan. We have
I think there is a technical issue with Mr. Oways. Is it getting stuck for you as well?
Yeah, I think Mr. Oways the issue.
Okay, all right. So, nevertheless, we have almost come to the end of this particular discussion, and I think Mr. Oways is back.
I'm so sorry.
Okay.
Can you hear me
He's
now?
logged in from a different system. Yes, we can.
So I was talking about Abusheikha Exchange Jordan. Today they have many solutions. We are one of the leading exchange houses in the area. We have a system that we can transfer money transfers into global international countries through that system, and we have a mobile application. So we have to face that risks that we face. You need to be upgraded, you need to be updated, you need to face all the new technology to be integrated to your system. You need to do API solutions with a multi-system, multi-international systems like WorkCheck and other systems. So I say that it's perfect. I like it. I need it very well. Sure, everyone needs it, but I mean, like, we need to find reasonable solutions that every company can afford to be always mitigated the risk to the minimum. Thank you.
Great. Thank you so much, gentlemen, for sharing your thoughts on various aspects of regulations or open banking or public-private participation. And I thank you so much for your time to be taking some time off your busy schedule to be a part of this particular discussion. Right. So we would wrap up this discussion as of now, and we'll definitely take it up in the later point of time, probably
Thank you.
in the upcoming editions, and see how have we fared in the time that we get to the next edition. All right.
Thank you.
Thank you very much. Appreciate
Bye-bye.
again
Have a nice day.
about the technical issue. Thank you very much. Have a
No,
good
no,
day.
I mean, I completely understand, Mr. Oways. It's good that you are back on the track.
Thank you very much. It was brilliant.
Thank
Thank
you.
you.
Have
Have a good day.
a nice day. Bye bye.